As we look ahead to 2024, our guest sees opportunities in artificial intelligence with further expansion in data infrastructure, these enormous server farms. Let's bring in Ivana Delevska, founder and chief investment officer at Spear Invest. Thank you so much for joining us. Walk us through what's going to happen with AI next year. What will be the big thing? Or is there anything investors are missing about AI right now, Ivana?
Well, thanks for having me, Andy. We just published a primer on our website on AI. And if I had to summarize it, I would say there are three layers to the AI opportunity. The first layer where we've seen fundamental improvement in 2023 is the hardware layer. This is chip companies like NVIDIA, AMD, introducing new products into this market. So that's where we really saw the upside in 2023, and we expect this to continue in 2024. However, the new areas that we have not really seen that much upside in just yet is the data infrastructure layer. So these are companies that provide tools and models to other B2B companies to be able to use AI. So we see the most upside in this infrastructure layer. This includes cybersecurity as well, right? So it's basically tools that enable companies to use AI. And then the third layer is the application layer. We see this one playing out last. So we're going to see a lot of application introduced this year, but it will be a question mark of which ones will be successful and which one will not be successful. And we think access to proprietary data will be the key differentiator in this last application layer.
One stock you like in data infrastructure is Snowflake. Now, are they about server farms or are they about other types of hardware?
No, they're part of the software layer where they sit on top of a cloud service provider and they help you manage, organize, and use your data better. So the first step, if you want to be using AI, is to figure out what data you're going to be using, and that's what Snowflake does. And we haven't really seen a big move in the stock in 2023 because it is a consumption-based model. So as you saw enterprises cut spending, the company was pretty hard hit this year, so it didn't really participate in the AI hype that was happening in 2023. But as we look into next year, we think that they're going to start seeing fundamental improvement in their fundamentals. So companies going to be using their services more, and they're going to be consuming a lot more of their platform.
And the symbol for Snowflake, SNOW, and there we have it, up almost 40% in the past year. For cybersecurity, you like the look of Zscaler or Zscaler, I'm not sure which it is, ZS. Why do you favor this name?
That's right, and so if we step back, I would highlight one key trend going into next year, which is companies moving from, or investment opportunities moving from mega caps towards smaller caps. So as we went into this year, NVIDIA was our top pick, but as we look into next year, I think a lot of the upside will be captured by the mid-sized players. So Snowflake is one of them, Zscaler is another one. Zscaler is a leader in cloud security, so this is going to be a new market for them as companies are trying to secure this data and secure these workloads. And they've been able to introduce just over this past year several AI-based products as well that help you assess your cybersecurity posture. So these are the type of companies that we think are going to do well going into next year. And we disclose all of our holdings on our website. These are real companies. They're still tens of billions of market caps, but they're not the mega caps, which did very well this year.
You do like NVIDIA. We don't have time to talk about it, but it was a pick, and it's done very well, and you've been vindicated. I love this, though. You are interested in some cyclicals that are out of favor, and you like the look of the copper miners, Freeport, and our own Teck Resources.
That's right, Andy. So cyclicals really got hard hit this year because of high interest rates. So when rates hit 5%, you really saw a very significant slowdown in economic activity. So unlike prior recovery where copper has led the way out of the downturn, this time around, the upturn has been much slower. But as we look forward, all of this data infrastructure and build outs in data center will require a lot of copper. So I think that's something that's not really priced into the stocks at these levels. And it's something that our unique strategy of looking across the value chain to find underappreciated opportunities, it fits that theme very well.